Good morning, good afternoon. How's everyone doing today? Let me see, we should be streaming right okay. Okay, good. Hope you guys can see me okay, hear me all right. Put into the chat if there is any issue. Hey Jimmy, how are you doing? Good afternoon. Thanks for that, Jimmy. Alrighty, super. Okay, good. Hey Lily, good to see you again. Hey Joe Marinas, good morning. It feels like it's been a long time since we had the last chat. No stream last week on Friday. I was completely down and out. Did not trade the NFP at all. Just wasn't in the right frame of mind and frame of body to trade NFP. But back and good, still alive, so back and good right now. So that's why we're back on the stream. Hey Soon, I'm doing great. I'm doing great now. A lot better now than I was on Friday, so thanks for that. Hope you all are well. Hope you all traded the NFP well. No big dramas. I mean, it shot down, the dollar index shot down, and then I think an hour after that bounced right back up. Have not had any trades since Thursday. Didn't do anything on Friday. I haven't done anything yet today. Still looking at markets, sitting right in that consolidation. Possibly going to consolidate for today, but we're looking to some trades coming up. Right, so if you're new to the session, again, please remember, do drop a message and say hi. Let me know where you're joining us from. And for all the regulars, a big welcome back. Thank you again for joining me on this market analysis live stream. You can help me out massively by remembering to click on that like and subscribe button. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. With that, quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence as the contents of this webinar are not intended to be a recommendation to trade a financial product, as your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Now, with that, take that away. Now, what has happened? What has happened since the last time we spoke? Apart from the dollar yen moving quite a bit. On Friday last week, we had the Japanese on the bank holiday. We had the Chinese on the bank holiday. Japanese bank holiday was for the Constitution Day. No idea what that was. It was a bank holiday, and the Chinese were closed for Labor Day. What we did have on Friday last week at 8:30 p.m. was the US non-farm employment change number release. It was 303K, got revised up to 315, expected 238. We didn't expect a big drop. I did not expect that big drop. We did think that based on, if I scroll back a bit, based on the ADP, there was a bit of a slowdown. We did think that it was going to sit around that 2 number, right? With JLTS jobs openings down slightly as well. So I did think that the non-farm payrolls or the non-farm employment change on Friday was going to be about that 220, 240 number if I was going to trade that, or if I was analyzing it at that time. But I was quite surprised when I did see the number being released at 175K, right? 175K with unemployment rate for the US climbing slightly from 3.8 to 3.9%, and average hourly earnings from a 0.3 to a 0.2%. So wage inflation slowing down slightly. Wage inflation slowing down slightly, while unemployment rate climbing slightly to 3.9, and non-farm employment change dropping slightly, well, dropping quite a lot from 315 down to 175K for last month. I don't think, or it's not enough, at 3.9% unemployment is still not enough for the Fed Reserve to start considering a rate cut scenario. You can see that the numbers have not changed, right? Has not changed since the 3rd of May at 9.16%, keeping rates on hold. Now it's still at 9.16%. Let me see if there's an update on that. Yeah, still put 9.18, 9.16. It's still staying at that level. So despite unemployment rate rising slightly to 3.9, it has not factored in too much into a rate cut scenario for the US FOMC, right? But on release of this news from the non-farm, from the employment numbers, what we did see on the dollar index, you see here Friday, I'll zoom in a bit more. Right, what you did see here on release of the news was quite straightforward. That was the 8 p.m. candle. It got released at 8:30. So the 8 p.m. candle saw the dollar index go down from 105.17 as low as, let me zoom in a bit, as low as I'll put it one beside, okay, as low as 104.50 before being outside of the Bollinger Band, way outside the Bollinger Band, rising back up, and then now resting just slightly above that 105 round number support level. Okay, so it's just sitting right there, but we did see that move consistent with the news release. Overall bad news on the employment front or the labor front for the US, leading to a drop in the dollar index. All right, but this drop in dollar index, as we said, does not factor too much into the anticipation that the Fed Reserve could start cutting rates. That's why it shot down outside the Bollinger, came right back in, and it's sitting at the 105 level. Any questions on the the Fed, on the, no, not Fed Reserve, on the NFP front? Did not get into any trades on this, wasn't trading on Friday, but if you did get into any trades, do let me know how you went. Just going to do a quick scroll through of what we did on Thursday, from what we spoke about on Thursday. The Kiwi dollar did push up, and also, so it did go up halfway because of the non-farm payrolls, shot up, would have hit a take profit, and even higher than that. So it came up to about 50 pips, and beyond that, came back down. Now looking like it might push back up. I'll tell you more about that shortly. Aussie dollar, same thing, pushed up following the non-farm payrolls, almost to take profit, came back down. The US yen, I was actually looking at this, but I didn't get into a trade. On Friday, I was looking at that. Where was it? Friday, at that point. As it was pushing up, I was considering that move down to the round number level. So I was looking at a trade like that on 30 to 115 to the downside, but I was just not feeling it. Missed out on this move. It did come down, hit that 152 level, and bounced right back up. All right, but this was what we spoke about on Thursday. It did come down to your take profit level. Pound dollar shot up, came back down, would have hit your stop if you didn't close out. Euro dollar sat in that area and then broke to the upside, did not come down. Sweezy tested slightly higher before coming down to a take profit, and then on the USCAD, it bounced around on this support level of 1.3710, broke the support to the downside, would have gone down to a take profit of 60 pips or even lower if you went down to that support level that we saw overlap on March. Could have gone down to 80 something pips to the downside, but we're looking at 60 pips there. Right, so overall, although we missed out on the analysis or the live stream on Friday, our Thursday analysis did take a little bit longer to play out, but still worked out quite nicely in the overall scheme of things. Right, so that's all last week. Not going to bother too much about it. Let's look into this week. Right, so before we start talking about what else could happen, you can see that today the Bank of Japan is still on a holiday in observance of Greenery Day and Children's Day, together with the UK on an early May bank holiday. Going to be seems like it's going to be a bit of a quiet market for today, especially after the big moves on Friday last week. But for this week, what we can be looking out for is tomorrow at 12:30 p.m. we do have the cash rate from the RBA interest rate decision, 4.35%. Most likely going to hold at 4.35%. There is a small increase in the CPI number for the Aussies, and that's ruling out the chance of the RBA cutting rates. So most likely going to stay at 4.35%. Maybe some more strength to come for the Aussie dollar. I'll tell you more about that shortly. And then through the week, on Thursday, we have the BOE. On Thursday evening, we have the BOE with the interest rate decision. Although they are likely to hold rates at 5.25%, we're going to pay attention to the voting. Right, they're likely to come to the point where they're going to switch from 018, which is second number is how many members voting, to decrease. Right, one member likely to switch from a decrease to a hold, right, to holding rates. So might not be the best news in terms of being hawkish, because they're moving away from cutting rates to hold. Not the best case in terms of being dovish, because they're switching from one member voting to decrease to holding rates. So they're likely to hold rates at 5.25 with all 9 members voting to keep it at that point. Might see a little bit of a hawkish move on the pound dollar, but we'll talk more about that on Thursday. And then on to Friday, we have GDP for the UK, employment numbers for the Canadians, and consumer sentiment. So overall, it looks like it's going to be a little bit of a quiet session this week, because we have bank holidays right across. In Japan, we have it in the UK today. You can see the pound dollar weak getting some strength, maybe because of the bank holiday. On to Wednesday, we have the French on a holiday. On Victory Day, on Thursday, we have the Swiss and most of the Euro on a holiday as well. And then the UK with their bank rates. And then through to Friday. Okay, so not saying that it's going to be entirely quiet, but we do have some key news events to be released. Like Diana is saying, looks good for the Aussie. For the cash rates from the RBA tomorrow, and then definitely on Thursday we're definitely looking at the pound dollar. Okay, now with all that said, you notice that we're quite short on dollar news for this week. Not a lot of dollar news to be had for this week, so maybe that's going to lead to some dollar weakness to come around, or continuation of that dollar weakness that we're seeing right now. Okay, with that said, hi Wachuku, how are you doing? Good morning. Hey Angel Case. Hey Diana. Oh, missed all these trades, got sick. Yeah, hey. We're half a world away, but we're all sick. I think there's a big bug going around. Right, so we saw a dollar index break to the downside. these levels are pretty much done. We can take those away. We have that level there. Take that one away for now. And I don't need that. Okay. I know that this 61.8 has been broken, but no, actually I don't even need that anymore. Okay. Alrighty, just checking my levels again. Okay, now if I took this all the way up, I'll keep that. Alright, sorry, I'm just checking my lines at this point. So checking this bottom level all the way to the top, 61.8 coincides with this 104 level. I'll keep that. My round number level is here. Okay, I'll take that one away. Hey Jamil, how are you doing? Today is my last day joining you. Oh no, we're on course to start tomorrow morning. All right, we'll be here, Jamil. We'll be here. So, dude, if you can't catch us live, you can catch me as a recording as well. So you can always leave a comment, and we look forward to hearing from you again soon, Jamil. Do take care. Okay, so I have, let me come back to this again. I have this round number at 61.8. Yes, I'm keeping that. I'm keeping this as an interim. I'll put it as a dotted and a round number level here. Okay. So what I'm looking at here on the dollar, we'll keep that as a resistance level. Now, there we go. Okay. So with that, then checking this move down, just making sure we got all conditions up. It came up to 23.6, shy of 38.2. Looks like it might push back down. Okay, that's what I'm looking at. So today being the 6th of May, dollar index, it's holding above 105 or holding at the 105 level. I probably want to see it break 105. Needs to break 105 support, and then it could head down to 104.60. Okay, so why I'm not, I mean, it could head down all the way, but why I'm thinking that it could come down just to 104.60 is because we don't have a lot of news today. It looks like it's a relatively quiet day. So it's gone up, it's consolidated, looking for it to break back down. If it does break past this point, could come down to test the previous low that we saw on Friday last week. Right, so generally still looking at some weakness to come for the dollar index. Needs to break 105 support before it could head down to 104.60. Yes, most likely consolidating at this point, but we're looking for it to break to the downside. Okay, we can add that in and say currently consolidating along slightly above 105, needs to break 105 support to head down to 104.60. There we go. Now, with that said, consolidating before heading down, before heading to more weakness on the dollar index, that's done. Take that away. What we're looking at here is on the Kiwi, that move came down very similar, inversely similar to the dollar index. We saw it come down, break 23.6, push back up. That's done, which you can take that away. that overlap, it makes sense. Come back up to that 50. So what I'm looking for in this case would be a bit more of a confirmation to the upside. 0.6025, stop loss 30 at the maximum. Take profit could go up to 50 to that previous high. I don't see it breaking up that much right now. So I come up to that previous high. We might, I'm just thinking whether we could do 25 to have a 1-2 to the upside. That would be reasonable. I would say 6025, 25 pip stop loss, 50 pip take profit to the upside for the Kiwi dollar. Oops, so we're looking at what's happening here. Okay, buy 0.6025, stop loss 25, take profit 50 to the upside for the Kiwi. Then with that, Aussie dollar pushing up, right? I would say at this point, not worth trying to trade it up to that resistance. These are all done. We can take these away. These are all done. I would say not worth trying to trade it up to that resistance, but anticipating that the RBA could or is most likely going to hold rates, right? And I'll show you what happened the last time. I always do this on the 19th of March. Where were we? On the 19th of March, which is right there. Okay. The 19th, right, on release of the news, we did see it come down, right? They held rates, but we did see it come down slightly through to Wednesday where we saw it push, or Thursday where we saw it push back up. There might be a bit of a push down if they do hold rates, but I think that this time might be a little bit different, because they're likely to say that because of the CPI numbers recently, they have held rates, and that might cause a further push to the upside on the Aussie dollar. What I'm anticipating is a slow push up, maybe a test, and then a push back up again on the Aussie dollar. So I would be, in this case, looking to buy it up 6670. Stop loss can be tight, 20 pips. Take profit could go up to 55 towards that resistance level up here. Let me just check. I'll be happy with that. That trend line is done. We don't need that. In fact, if you had this, you would see that that trend line would hold. That trend line would hold, so we're looking for it to push up, test the trend line, and then continue higher again. Right, so 6670, 20 pips to 55 to the upside for the Aussie. 6670, stop loss 20, take profit 55. Let me double check that. Yes, okay, I'm happy with that. That doesn't seem like it's going to consolidate for a long time. That actually looks like it's going to push, likely to push back down. Just want to do something here. Yeah, if it does break at 23, I could see it come back down. Okay, I'm happy with that. Now to the yen, right? The yen has been dropping, and take all these away. We don't need that. The main thing that I would highlight on the yen is that there has been talks and articles written that 152 seems like it's the comfortable level that the BOJ is looking at, right? They might be looking at 152 as a reasonable level. So might not be too might not be too keen, take that away, might not be too keen to think that the yen could come all the way back down. Yes, it would make for great trading to sell it back down all the way, but it seems like this is the level where for now the BOJ is comfortable with the yen being at. So with that, take away some of these lines, we don't need that. That's good to have, but we can take that away. I just want to clear out some lines just so that we know what we're trading into. I'll take this point here and it'll be 150. In fact, we'll take that middle level here, so 154.50 right there. Okay, so what we're seeing here on the yen is if you took this all the way down, it's come close to that 38.2 level before pushing, likely to push back down. If I just took this move, it'll be about there. 38.2 right there. Okay, so what I would still be looking for, because of that recent push to the upside, is for a test and reject of that resistance at 154.50, around 154.50, right, to sell it back down. It could sit there, and push lower, but I do think that we might see it push back up a little bit more. No, actually correct that. That seems to be too big a push up. That's 100 pip. No, I don't think it's going to go up that much. Take that away for now. Let's have a look at this direction instead. Now looking at this, okay, if you look at this, from this downward push, it came back to 61.8. This one came back up to about that 50% level. All right, so let's do it this way. If it fails to break above 50, all right, that way, let me just highlight that. If it fails to break above this 50 level, I'll still be looking for downside moves. Ideally, I would like to see it come back up, test and reject and sell down. All right, so I would be looking for a selling opportunity below 154. 154, stop loss will be tight, 30 pips. Take profit could go down to 200 to the downside. Test everything. Okay, I'll keep that. I like that one. Test the area of that resistance together with that 50% retracement level. So I'll test and reject. Look to sell down 154, stop loss 30, take profit 200 to the downside. I'm not going to be too keen or anticipating the yen to break that 152 level. I don't think I think even if it does break, it's going to spike back up quite quickly. So I'll be looking for that move instead. Okay, so US yen, we're looking to sell down at we're going to look for a test and reject. We're going to sell at 154, stop loss 30, take profit 200 to the downside. US yen has been very good for us, but it might now be time to urge a little bit more caution. That big reversal is pretty much done. It seems to be slowing down. If it does break above, then we might see a bit of a crazy move back up, because there is also a slight formation of a shoulder head with that neckline forming in that region. So breaking up could validate an inverted head and shoulder and a big reversal back up. I don't think that that's something I will be very, very keen on. Something to consider, but not very keen on that. I'd rather see a test and reject to sell it back down. Okay. Then with that, looking at the pound dollar, shot up, came back down, tested that resistance turned support level. Now pushing back up again. That one is done. We took that and see 50. That's my 50% level right there. 61.8 is done. We can take that away. We don't need that. And that move at 61.8 is there. Trend line that way. Pushing back up. Bounce off the support. Pushing higher, anticipating that dollar weakness, we could see this push up. Okay, together with maybe some pricing in of the Thursday news, we might be seeing this continue higher. All right, so what you could be looking for, I think that we're going to see it push up a little bit. What I think is not the best place to enter right now. Right? If you enter right now, you do have a bit of a wide stop loss. I'm possibly thinking that we want to see a bit of a test and reject. What I mean by that is I'm thinking we could see it push up a little bit, come back down, test, and bounce back up. Which would look like coming up to this point, test, come back down, and we could be looking, if it does push up all the way, then you would be looking at shorter term trades to the upside. But I would say that at this point, I think it's a bit more volatility to be in the middle here. So I'll be looking only to buy if it tests and reject 1.2560. Stop loss 30. Take profit. We do have 140 to the upside. You could go for the first target of 75 pips up. And next one is 140. All right, and at 100, at 70 something up here, it's just because of that previous high. I see it pushing up, so I'm actually thinking that could you trade it up from here? Stop loss 40 pips, take profit 60. To the upside first. I think that would be a M15 kind of trade, right? So pound dollar, to trade it up to that previous high, you look at M15, continuation to the upside. That would be the kind of trade I would look for. But if you're looking at it on the H1 time frame, then I would be looking for a test and reject to bounce back up. You bought it up from here. Oh, you could do that actually. Okay, you do that. Here we go. So short term, this is what I'll be looking for instead. You could look to trade it up briefly, covering this move of about 60 pips to the upside. I think that would be a M15 kind of trade, a short term kind of trade. Right, but if it does break above last week's high, then you'll be looking at 1.2643. Stop loss 20, take profit 60 to the upside. Okay, so I like that one. We're looking to buy at 1.2643, stop loss 20, take profit 60 to the upside. In the meantime, you can be looking at shorter term trades on a smaller time frame to trade it up to that previous high. I'm looking for a consistent push to the upside. Why it shot up and came back down again, you all know it's because of that Bollinger. So what I'm looking for is a steady climb up and then a continuation to the upside. Okay, oops, what did I do? Okay. Hey Stefan, good morning, how are you doing? All good so far. Do let me know if you have any questions at any point in time. Have I totally lost everyone or you guys are still okay? All right, now on to the euro. All right, euro, we had that straddle on that resistance. We were like, oh, it could break up, it could retrace. Where could it go? It did not come down. Take that away. It did break up above that resistance, now turned support. That 50% level is still good. Oh, it's not still good, it's done already. Okay, we can take that away. We can take that away. Okay, we take all that out. And we have our resistance up there. Okay. So now, looking at this, from this point up, we have 50% right back down at this support level. Okay, and it's sitting in consolidation at this point. It looks very similar to what's happening on the pound dollar. All right, so euro sitting consolidation at this point. We don't need that. That's a good relevant point to have. I would actually change it down to this point here, just a bit nearer. That was our previous high from last week. In that consolidation, if you're a little bit more aggressive, you could be looking to buy it up 1.0780, a 25 pip stop loss, 90 pip take profit to the upside. If you're not so aggressive, then I would say that you could look to buy it up above that previous high, 1.0805. Stop loss, same thing, about 25 pips. Take profit would be up about 65 to the upside. Okay, so you do have the immediately after breakout get in. It could, why I say it's a bit more aggressive is it could break up, come back down again. Right? Or you could wait a little bit longer, look for it to break out, and then above the previous high to the upside. Between these two, what I would prefer would be this one. Right? I would prefer that because it's just today being a bit slower. I think that any breakout could come back out, could come back down again quite quickly. So I'll be looking at 1.0805, stop loss 25, take profit 65. We've done that one already. So we're looking to buy at 1.0805, is it? 25 to 65, yes. 1.0805, stop loss 25, take profit 65 to the upside. Good. Then on to the US Swiss franc, shot up slightly, tested, came right back down, could have hit a 75 pip take profit or a maximum of 120 to the downside. Take all that away. That's done. Take those away. Drag it all the way down. You see that it came back up to 23.6, looking like it's going to push back down again. We don't need those. That is fair. Now, if it does push down, okay, so what I think is going to happen, it's going to come down in this area and it's going to be quite volatile, quite choppy at this point, because the last time it came down, tested, bounced right back up. right? And in this area, if I drag this right across, you see that in this area is very choppy, and it's held this 0.90 level quite well. This whole support area has held quite well. And if I drag this right across, so what I would be looking for here on the US Swiss franc would be a little bit different. Will be a little bit different in the sense that I'll be looking for it to come down to test this support level, and very similar to what happened in March and early April and mid to end of April, is going to come down, test the support, and bounce, possibly bounce back up. Bit of a different view, so we're looking for about a 9025 stop loss, 30 pips, take profit. If we did that, 115, let me see. If it's choppy around here, you could be looking at that. Okay, so what you would be doing instead, 9020, you'll be doing short-term trades in here. Short-term trade in this area, but we're looking for a test and a bounce back up. So what it means is that, okay, it looks like that, 9025, stop loss going to be 30 pips, take profit, we're going to go for 115 to the upside, but we know that it's going to, is not, the bigger confirmation is if it breaks above this 23.6 level, which is 9055. Okay, so what I mean by that is we're looking to buy US Swiss franc 0.9025 stop loss 30, take profit 115, but confirmation for that big upside potential is above 9055. So confirmation for big upside is above 0.9055. Okay, so you could buy it up. If it hesitates around there, you want to close it out. But if it breaks strongly above that, then we could see bigger upside potential on the US Swiss franc. Then onto the USCAD, bounced around on this support level, broke down towards the support. Take that one away. That's done on our 60 pip move to the downside. Now that's done, so we can take that away. 61.8 on the long term has held. We'll keep that. Trend line is done. Take that away. Don't need that either. So with this, we're looking at a move like that. Came back up, tested 50, failed to break higher. We'll keep that there. Considering, so I think there was some news there. No. Considering that it's sitting there at 50, and we are quite, if you look at this, we're looking to buy Kiwi, buy Aussie, buy Pound, buy Euro. This is quite bearish on the dollar. So I might be considering on the CAD, if we do see the dollar bounce back up instead, breaking above that resistance, support turned resistance level. I don't need that actually. Okay, we take that one away. What I would be looking for is to break above this area, 61 and that 50%. It tested 50, rejected, came back down, sitting in that consolidation, right? Sitting in a consolidation just below that 50% retracement level. If it does push up, I wouldn't do anything here. Look for it to break above 61.8 to buy it up. Then we'll be looking at about 1.3720. Take profit would be about 60 pips to the upside. We don't need, yeah, we have that, but we want our recent high, so about that point there. So I'll say 60 pips to the upside. Stop loss 25, 30 pips at the very maximum. So we're looking for this move up on the US CAD. Okay, so 1.3720, stop loss 30, take profit 60 to the upside. This is what we're looking to buy at 1.3720. Stop, is it? Wait. Yeah, okay. 30 to 60, that's fine. Take profit 60 to the upside. See dollar still sitting there, consolidating, looking for it to break back down. Needs to stay below 105.50, which is that 50% retracement level. That's the point I'll be looking out for. Then on to gold. All right, on Friday, look at that. On Friday, we had that spike up because of the dollar weakness, and then quite immediately the dollar strengthened back, so we saw this spike right back down, testing that 2280 level, right? Testing that 2280 level before pushing back up again. I would say that that support is down to here, so we can take that one away. Put that support here because it's tested and bounced off. I don't need that level for now. I have my level here. Okay. So we're looking now at gold. I want to check this point here. I think that there might be a brief upward push on gold. Might be a brief upward push on gold, but thinking that it has been pushing up, failing to go a lot higher before coming back down again. So what I'm looking out for in this case is possibly a move like that back down again. Right, so gold above 23.25 could get to 23.45, but might be held at that point before tracing back down. So gold, we're looking for it to be above 23.25, could get to 23.45. 23.25 could get to 23.45, but could top out at 23.45. Okay, does that make sense? Now with that, then a quick check on, because we're looking at the yen sitting there, possibly pushing back up slightly before turning back down, and how the pound dollar looks like it's pushing up on the pound yen. We see that pushing a little bit higher. Let's clear out some lines here, too many lines. Support level down here. Big upward push. Might find a bit of a, well, there's a big resistance here, we know. And a bit of an interim level. right about that point there. So same thing, pound yen, I think that it might push up a little bit before maybe coming back down again. Okay, maybe back to as high as 195.60, but within this range, we might see it top out and reverse back down. Then onto the Swiss yen, we saw that already. Again, too many lines, take that out. We see the bottom here. We see a lot of levels right in the middle here. This whole thing is a big consolidation area. This whole thing seems to be a big consolidation area. But if it does break up, and look, we were thinking that the dollar Swiss could push back up. That could drag the Swiss yen up. If it does break above 170.20, or you could be looking at 170.55, stop loss be about quite wide. It's quite a wide stop, but we're looking at it to come back up to that point there. Right, maybe you can go a bit nearer with a bit of a hesitation level in the middle here. Oh wait, you could be looking at that 170.90. Stop loss will be tighter at about 40 pips. Take profit will be about 120 to the upside. We're looking at that kind of move. Right, so it sits in that consolidation. If it does break out above that previous high there, it could push up and towards that resistance level that we see up here. All right. So thanks for that, Jamil. Take care now. With all that, we're still sitting, not a lot of trades for today, I don't think, but we're looking at the dollar possibly consolidating, or right now consolidating above that 105 level. A lot of patience required. Wait for it possibly to break that 105 support level. If it does do that, then we could see it trade down towards that 104.60 level. For today, maybe. I don't see a lot of news. Tomorrow, for sure, we're looking at the Aussie dollar. I will be quite keen on that. So maybe tonight, slowly pushing up and then testing that resistance. Tomorrow, I'll be looking for that trade back up for that 55. With that said, please remember, if you haven't already, do join us on the Discord channel. And please trade well, trade safe. I will see you all tomorrow on the live stream again. Take care now. Bye-bye.